Right, we're with Breakingviews. As Edward had us this morning, we're going to talk about this Basel move, what it actually means for the banks. Banking shares are up, but longer term, how good is this? Edward, your headline, liquidity U-turn, sell signal for bank shares. Why, if ultimately this will promote growth?
Well, if it promotes growth, it's a good thing, and then that would be good. But the way that investors are thinking is, look, these banks can keep more of their high-yielding assets. They might even be able to use to have less sort of need for very low-yielding assets. They can lend more. So that's one drag on bank earnings that's been taken away, and the stocks are up quite sharply this morning. The way we're looking at it is, look, the regulator looks at the banking situation. This is the Basel Committee, and they say, you banks are really in trouble. There's no growth. We've got to concede to you a little bit of ground, because otherwise the economy could grind to a halt.
That's the paranoid way of looking at this, right?
It's not the paranoid way. It's the reasonable way.
The realistic way, is it?
Exactly.
Is that really what that's really what you're getting at?
No, it's definitely what
regulators worried about global growth.
There's no question, because the regulators started out this process with a very aggressive, you banks have just been reckless. You have got to get a lot more truly safe assets on your balance sheet. In case of a crisis, we don't want to have to call on the central banks to rescue you all the time whenever there's a crisis. And they're giving it up, basically. They've made a pretty big U-turn, and the reason is entirely macroeconomic, that this is not the time to push banks to safety.
So how long do we wait then before the positive part of this kicks in? I.e., banks start lending again, the system starts moving again, and GDP benefits from that.
Well, let's hope that it comes around pretty soon. I mean, that's sort of implicit in the idea that banks are doing better. In the market's idea is the idea that this is going to have some economic effect soon. But the main story of the last 4 years from a macroeconomic point of view is you keep easing policy and keep policy at pretty extreme levels, and not that much happens in the economy. So this looks like more of the same. Give in to the financial system for the sake of the economy and hope for the best. A
bit of a curveball about you bring up central banks. Which central bank is going to be the first to stop QE, do you think?
Well, the Fed looks like it's sort of fading a little in its confidence. I mean, they've been the most aggressive, but the meeting minutes on Thursday suggested that at least some of the members there are really getting antsy about the possible negative effects outweighing the positive.
So you think it'll be the Fed?
I think the Fed is the most likely to well, the Fed's been the leader in global central banking for years, and I think will remain so.
Yeah, all right. Edward, many thanks for that. You can read that piece, of course, on the banks, the reaction to this Basel move on the Breakingviews website. If you want to watch our US show, that comes on every day, 12:30 Eastern, 17:30 GMT. I'm Axel Threlfall. This is Reuters.